Good evening, students. Welcome to the live coaching classes organized by Board of Studies, ICAI. Today's evening, we are going to start with a new topic for discussion on valuation under GST law. Little interesting and also little important from understanding point of view. Reason, this is not procedural, rather this is more logical and this has got more practical application from industry to industry point of view. Before we start with our today's discussion as a protocol, let me have a confirmation from some of you. You're able to hear me and also you're able to see my screen properly. Just let me have confirmation from some of you so that we can start with our today's discussion, right? Good evening, Mansa. Good evening, Viraj. Good evening, Balaji. Hope learning is going on well. All of you are listening to me for May 2024 attempt. This is a new syllabus. So a lot of expectations are there. How the pattern is going to be, how the problems are going to be, what changes are there in the material. So everything are going to be the same. Minor changes are there where case study based problems are attached to this particular material. In the course of our discussion, we will also touch upon those aspects. Thanks for the confirmation, Rahim. Let's start with our today's discussion. So the flow of our today's discussion, I'll make you to understand the basics of this topic called valuation. In the process, I would take you through a couple of examples where this aspects of valuation we are going to discuss upon. Also, there are a few important definitions under GST law which are relevant for us to understand before we apply this topic of valuation. I'll also make you to understand the provisions under section 15 which deals with your valuation. Last but not the least, valuation rules read with some expectation on these aspects will be discussed, right? This is our flow of today's learning. Now, I'll give you one particular live example, which will help us to understand this particular topic called valuation. Just give me a minute. So, when we talk about this topic called valuation, the importance of here would be, see, there is an assessee whom we call as a registered person. This registered person makes a transaction. This particular transaction, we would call that as a supply. This transaction, we would be examining whether it is taxable or whether it is exempted. If it is exempted, no action. You make a supply, make a respective disclosure under GST returns. If this is taxable, there comes the next important aspect called classification, where we try to identify what is the nature of this activity. Is it goods? Is it services? Having identified what is goods or services, I would try to examine what would be my rate of tax. So this is a normal procedure what we would be doing in relation to a particular transaction. Once we identify what is the rate of tax, there comes a challenge called value of supply. Where we need to understand whether this particular value of supply is completely in terms of money or money plus something else. My value of supply is in terms of money or money plus other consideration. Now, money is something which we always quantify. We can refer to the documentation, to the contracts what we have. When it comes to the other aspect called other consideration, This is quite tricky. This is quite tricky for someone to identify what would be this other consideration. Like example, when we talk about exchange of goods, exchange of goods. For a moment, let us assume that the registered person is into the business of supply of electronic, supply of electronic goods. Here, most of us would have come across a scenario where buy new product, and you can have an option to exchange old product. Exchange old product. For a moment, we would have seen a refrigerator, TV, or mixie. This sort of home consumable goods, we would go to a shop and say, uh, sir, we have our old used television. You're charging for a new television, sir, 50,000. Now, this old television is of no use to us. Can we do so where I'll give back my old TV and I would take my new TV? In exchange, can you give me a concession? The shopkeeper at times would say, okay, sir, say 50,000 is the value. Pay me 45,000 and balance 5,000. Please give me your other old used commodity. So here comes the importance of value of supply on which GST needs to be paid. This is a topic which we are going to learn on today to understand why we have to learn this valuation and how we are going to adopt this particular valuation for our examination purpose. Okay. This one slide is going to give you a complete picture what is expected from section 15 read with valuation rules. My suggestion, when you're listening to me, please have your institute material. Please have your institute material. Wherever you come across a particular topic which I have explained, please make a running notes in your institute material. Please make a running notes in your institute material. I'll come back to my presentation. Value of supply. So what could be my value of supply? Value of supply could be consideration. Consideration which is measured in terms of money. Measured in terms of money. We all know the legal exchange, the legal tender of a transaction which is recognized by RBI would be considered as a legal value of money which is measured as a consideration. In addition to this, what else could be there? There could be something called free supply. My value of supply could have consideration which is identified by way of money, which has got one more element which is called as free supplies. It so happens that when a particular transaction takes place, the buyer is in a position to negotiate with the seller, saying that, look, can you give me a reduction? Can you give me a concession? Where I will give this particular commodity as a free supply, incorporate that particular commodity in your main supply, and give me a concession. I'll give you one example where you would examine, where you would understand this particular aspect called free supply. I'll just come to new slide. Yeah. Assuming for a moment, when I talk about free supply, let us take example of a service provider and service recipient. Service provider is let us assume that he is a builder who does the construction activity. Service recipient is a trust which runs a school, Now, trust has approached this builder, the service provider, saying that they need the say auditorium to be constructed in their school. Auditorium to be constructed. When they give their requirement, this particular service provider comes and says the value of supply is say rupees 250 lakhs. Now, he would say this 250 lakhs comprises of construction material. Also, this consists of, say, electrical items like your cables, your PVC pipes, etc. Your sound mechanism, etc. Then you have your paint, tiles, etc. Assuming this is a requirement which is required by the service provider to give the desired auditorium to this particular trust. Now, trust says, look, I have this trust receives donations. So what happens? This service recipient says, like, look, I receive donations where I'll ask one of my donor, say donor number 1 called Mr. X, who can supply cement. I have donor number 2 called, say, Mr. Y, who supplies paint. So here, this particular trust, say this name of trust is ABC School. ABC School. ABC School request Mr. Say builder, I'll call this service provider as, say, Mrs. PQR Limited. PQR Limited. This particular entity, ABC School, requests this particular service provider called PQR Limited from 250 lakhs. Please reduce the value of cement. Please reduce the value of paint because I have donors. From 250 lakhs, this particular gentleman says, okay, I'll reduce some 25 lakhs over here. And over here, I'll reduce another 2 lakhs. Overall, 27 lakhs is reduced on account of free supplies. So here, ideally, if you see the desired auditorium, if it has to be delivered by the service provider to the service recipient, this cement and paint are essential. These are essential part of my supply. But because I gave a breakup for 250 lakhs, on the basis of this 250 lakhs, trust says I'm going to get you donations. Now, most of you, if you ask me, so why these kind of arrangements, accommodations happen? There is something called tax planning. There is something called tax planning. Assuming for a moment, the value of this 250 lakhs is subjected to GST at the rate of 18%. At the rate of 18%. So here, this particular trust, who happens to be run by a chartered accountant, he says, look, I have 27 lakhs on which I have to pay GST. More or less, say some 4.8 lakhs is what I have to pay. I can save on this 27 lakhs some rupees 4.8 lakhs as GST. This GST can be saved where I request my donors who are giving donations, rather than giving money, I ask them to supply this particular items, the above items, as FOC on free of cost basis, to my service provider called PQR Limited. Now, if you ask, sir, is this a tax evasion? I would say there is no intention to hide anything. The service recipient is trying to examine, can he save, can he reduce his burden of taxation? Now, to accommodate these kind of transactions, my section 15 has taken care of all these particular adjustments. So I'll come back to my previous slide where when I talk about value, please keep in mind, free of supply also forms part and parcel of my value of supply. Next. There is one more element called pure agent. When the delivery happens, when there is a supply which takes place, I'll just come to a new slide. Say there is a seller, there is a buyer. And let me call seller as ABC Limited, who manufactures, say, cement. Now, I have a buyer, say, Mr. X. Now, most of you, if you look at the business model, ABC Limited, who manufactures cement, he doesn't have a capacity to make a door delivery or ensure that this particular product reaches to customer directly from ABC Limited. Rather, what ABC Limited does, it appoints various people called agents. We would have studied in our intermediate level, principal agent. Through agents, the sale of goods happen to end customer. So here, for a moment, let us assume that this particular manufacturer is in Tamil Nadu. Agents are there in Tamil Nadu, Andhra Pradesh, Maharashtra, Kerala, and Karnataka. When the sale happens to the end customer, we need to keep in mind the value at factory, And when the sale ultimately via agents it reaches to this particular end customer, I have some expenses incurred by agent. So what are those expenses? Maybe transportation. Maybe I have warehouse expenses. I have marketing expenses. All these expenses incurred by agent are relevant when I talk about my value of supply. Now, please keep in mind, this is one concept which underwent a lot of change right from central excise era to GST era. Under central excise era, we had a notional valuation called 110% of COGS at factory. 110% of COGS at factory. So we had one cost accounting standard called CAS 4. This was a mechanism which was there under central excise where it completely was revamped under GST law. Maybe by another 1.5 hour, we would be touching upon something called Rule 29, which deals with your value of supply, where this supply happens through a pure agent. So here, when we talk about value, the third element which we need to keep in mind, when the supplies are taking place through a pure agent, the implication of value for expenses incurred by this agent on behalf of my principal. This also has a bearing effect on my valuation. For a moment, I'll again give a clarification here. I'll start from this central excise point of view. I'll give this example where, assuming for a moment, I have a factory in, say, Maharashtra. I may sell this particular goods through my own branch or through my own stock dealer. Now, when this particular transaction takes place, there is something called C&F charges, transportation charges, insurance, go down rent, marketing and other expenses. All these elements were to be factored for payment of central excise. Now, there was one particular phenomenon which was adopted under central excise, that is 110% of the value at factory. But GST law, it is a conglomerate of state and central. Central excise was levied under central jurisdiction, where central government has authority to frame their own decisions. Now, to have a bandwidth match between states and center, this particular phenomenon completely was changed under GST. So we'll have a understanding on this particular aspect when the transaction takes place through pure agent. Last but not least, it is not always guaranteed or it is not always mandatory where I start with. On this value, I have to pay GST. There are certain circumstances where I can claim a deduction. From transaction value. This is covered under section 15, subsection 3, which precisely talks about your discount. Discount by whatever name called. Today, what I will do, maybe another 1 hour from now, I'll make you to understand what is the importance of this 15 subsection 3, which excludes some portion from it, which is called as value of supply. So students, this is one particular slide which is completely relevant for section 15, what we are going to study from now. Let me see if there are any doubts. Please let me know if I'm jumping ahead or if I have to go in a slow pace to make you understand in a better fashion. Mansa is asking one question where this is in relation to time of supply, what we have discussed in the previous session. Section 13, subsection 3, supply by associated enterprises. In this case, mostly section 7(1)(b) transactions, importer services, whether or not in course of business. Your thoughts? Okay. I'll clarify or I'll elaborate this particular question of Mansa for benefit of all other students. Mansa is asking in relation to transactions between a related person and associated enterprise. Let us assume that, say, I'll name an entity called Mansa Limited, registered in Maharashtra. This entity has got a parent company or it has got a subsidiary company in Singapore. I call that as Mansa INC. Now, for a moment, say there is a server of, there is an ERP. This ERP used by Mansa Limited in India is maintained by the subsidiary which is there in Singapore. Every month, so this Singapore entity has to raise a bill on this Indian entity for upkeep and maintenance of this particular server. Now, I call this as an import of service. When I call this as import of service, my section 7, which talks about supply. Supply has got 8 elements: sale, barter, exchange, license, release, rental, etc., which is done in the course of furtherance of business. Alternatively, I also have one more section, which was section 7, subsection 1, which deals with your aspect called import of service. So when I have this import of service, when I have this particular import of service, activities of transactions which constitute a supply, whether or not there is a situation, whether or not there is a consideration. Also, import of services for a consideration whether or not in the course of business. I could have a transaction where I imported service, no consideration is there. Or I have imported a service where consideration is paid, but I say, sir, it is not in the course of furtherance of business. So please keep in mind, when I have import of service, where there is a consideration paid, then it would be considered as a supply under section 7. So what happens if there is no consideration? Then your schedule 1 kicks in. By virtue of your schedule number 1, this will be deemed to be a activity of supply by virtue of 7, subsection 1, clause C. So here, both cases are considered to be supply. Second point. So when there is an associated enterprises, what happens with respect to GST? Like TDS transactions, if I make a provision in my books, I have to pay my GST. If I make an advance payment, I have to make a payment of GST. How? On a reverse charge mechanism. So here, with respect to import of service, whether or not in the course of business, once it is established that there is a supply, tax needs to be paid under section 13, subsection 3, the month where you made a provision for that transaction. How to value schedule 1 transactions of section 7. Now, Mansa is asking, sir, how do I value these transactions under section 7? Mansa, I'll give you an example. This is in relation to transaction parties. Wait for another 45 minutes. I'll give you a clarity with regards to this aspect of import of service where it is a schedule 1 transaction, where there is no consideration. How my valuation rules are going to help me with identifying this particular value. So wait for this subsection 1 of section 15. I'll give little more clarity with an example answer. Basics to understand transaction value under for payment of GST. Students, I would advise when you look at this income tax, when you look at indirect tax, etc., don't look from examination point of view alone. Reason. These topics actually teach us, it makes us learn the basics how business operates. Like when you read, like the other day, when I was talking about value of supply for watches, I was talking about how watches are relevant, how time of supply is identified for a watcher. I gave this example where a bookshop gives a watcher to a CA firm, where the chartered accountant purchases, say, 100 watches well in advance. I gave a business model where liquidity can be created in a business by reading a particular topic. So my advice would be, when we read this particular topics under income tax or indirect taxation, our job is to understand why this particular topic is there and how is it relevant for business. Let me put it this way. To clear your examinations, if you take up your institute material, practice the problems, it is pretty easy to clear. Rather, you're making an attempt to listen to these classes to get a edge of getting the concepts understood in a better fashion. Wherein, once you get qualified, you may become a CEO, CFO of a business, or you may get into a practice to give an advisory role. Wherein it is very, very important for us as a professional to make use of these learnings of the subject, how it can be advisory to my customer. So first and foremost, transactions, weight transaction value for payment of GST. I'll put it this way. There is no hard and fast rule. That a value adopted for particular transaction to be same for another transaction. So here I'm trying to say, when I look from transaction value, there is no hard and fast rule that, sir, I need a supply. Like I'll give an example this way. For a moment, assuming for a moment, I say Viraj happens to be a shop owner of electronic gadgets. Say Viraj sells laptops. When Viraj sell a laptop to Praveen, when Viraj sells a laptop to Mansa, say Viraj may sell a laptop to Praveen at rupees 50,000. The same laptop, when Viraj is selling to Mansa, he may sell it at 60,000. Now, Praveen purchased Dell, say, i5 laptop, which is having 512 SSD. Mansa also has purchased Dell laptop, which is having, say, i5 processor and 512 SSD hard disk. When features, everything is same, government officer may not question, Viraj, you sold this particular laptop to Praveen at this price. You sold this particular laptop to Mansa at this price. There is a gap of 10,000. Please pay the GST of 10,000 on 10,000. Now, this is one aspect we need to understand. Now, question may come. For Viraj and Praveen, for Viraj and Mansa, is there any related party transaction? Is there any free supplies, etc.? Probably no. Out of love and affection, out of respect, out of various other reasons, Viraj feels, okay, he's my guru. Let me give the best discount possible to Praveen. So here, the transactions, when we talk under GST, this is like a medicine. Once a doctor gives a prescription of a tonic for cough syrup to an adult, it may not be the same syrup, it could not be the same prescription which can be applied to a child who is of 5 years old. So when a patient comes for cough, prescription given to an adult, prescription given to a child always varies. This is how my transactions under GST also change. This is point number one we need to understand. Second aspect, when we look at these transactions, very, very important aspects, what is my value of supply? What is my value of supply? That means to say, what is my contractual agreement? Is it inclusive? Is it exclusive? Is it X works? Is it FOR? I have to examine all inclusive. That means to say, when Virat sells a laptop, when Virat sells a laptop which is worth rupees 50,000, assuming this is taxable at the rate of 12%, then what Viraj will do? 50,000 into 100 divided by 112 for calculating the basic value, or 50,000 into 12 by 112 for the purpose of GST. This is one mechanism where, based on my contract, my value of supply will change. Example number 1. Second, commercial terms. Commercial terms, please wait and watch. Examine carefully. X works CAF transaction. When I say X works, the risk and rewards are transferred at the factory gate of seller. CAF transaction, cost, insurance, freight. As a seller, let us take this example this way, CAF transaction. For a moment, I'll just come to a fresh slide. Say, seller is Viraj and buyer is Mansa. My seller, my buyer. Viraj is in, say, Maharashtra and Mansa, she is in, say, Kerala. When goods are sold by Viraj to Mansa on CAF basis, cost, say, 20,000, insurance and freight, say, 2,000. Now, Viraj cannot adopt 20,000 alone for the purpose of GST, and he cannot ask Mansa, please deposit 2,000 separately to my account. I'll bill you for 20,000 and I'll claim a reimbursement of 2,000 from you. Rather, my total transaction will happen to be 22,000 because this is my CAF transaction, cost, insurance, freight. Since Viraj has recovered from Mansa whatever money, all that should form part and parcel of my transaction. Students, I'm giving basic examples. How we have to correlate these aspects in our valuation. I'll give you I'll give you the reasoning. Why is that I'm giving these basic examples? You might be thinking, all this we have studied at our intermediate level. Why is that we are still reading again all these basic aspects? I would put it this way. At final level or post-final level, you're going to be in an application mode. I would call all of you are going to be called as an expert. All of you are going to be called as an expert. Where 360 degrees you are supposed to think the transaction and give a advice to a particular assessee. When you become an advisor, you will give accounting aspects. You will teach them how the accounting has to be done. You will examine what are the compliances under TDS, 194C, 194I, 194R, etc. You would also examine GST point of view, how this money of 2,000 will be recovered and how this will be parked in my books. Also, you have something called your financial transactions, financial adjustments or banking transactions, where business is very, very dynamic. When the business is dynamic, you would come with a business model saying that, look, this is my MRP. This is offer. Say MRP is at 25,000. In an offer, you would be selling at 22,000. You would be selling at 22,000. Now, when this offer has to, when you have to sell at this price, you will be selling as a normal thing. When you have to sell at an offer, probably you have to give some freebies. Now, all these aspects, which comes as a business package, you who are going to be a future chartered accountant, you're going to give advice to a particular assessee. The responsibility of you is going to be very, very phenomenal to think and give advice. Wherein, I'll just give one simple example for you to understand how you're going to manage money aspects of the business. For a moment, let's assume that, say I'm an e-commerce operator. I call as this, say there is a buyer, there is a seller, and in between I'm an e-commerce operator, where I get commission from seller. From seller, I get commission. So buyer places an order on e-commerce platform, and seller through e-commerce platform supplies the goods to buyer. Now, assuming that 11th March 23 order is placed. 12th March 23, the order is confirmed. Order is placed. Order is confirmed. 15th March 2023, shipping happens. Say 20th March 23, delivery of goods is made to this particular customer. So this is my flow of transactions. This is my flow of transactions. Now, once the goods are delivered on 20th March, you would have mentioned to customer, look, 7 days from this particular delivery, payment will be made to you for this particular transaction. Now here, 11th March, money came into bank account of e-commerce operator. Bank account of e-commerce operator. Actually, the payment to the seller is made on 27th March 23. Now look at the gap. 27 minus 11, assuming 16 days. 16 days. The money is going to be enjoyed. Now, this is where working capital management comes into picture. You as a CFO, when you are monitoring this business, whatever money is coming to business, you make a fixed deposit of this money for 7 days and release that money for after 7 days. Why? You need to make the payments to seller. Now, this is how you play around with money in your entire business model. Friends, I'm giving just one of the tip of the complexity what we have in our business. So because our business is dynamic, my advice would be look at these subjects, look at these topics in a 360 degrees approach to understand what is that we are trying to look from application point of view where there is a exposure for non-compliance under the law. Coming back, treatment of transactions between related party, unrelated party. Now it is very, very important to identify related party, identify unrelated party. This transaction, both in direct tax, both in indirect tax. This is going to be in back of your spine all along as you do your business. All along as you do your business. Clear? Viraj, please. You have your institute material, ma? I'm just giving you the background before I get into the actual theory part. So whatever examples you feel relevant, you can make a note of these examples, ma? Okay. Now this related party transactions, unrelated party transactions, it is time tested under FEMA, under income tax when you deal with your transfer pricing, when you deal with your income tax provisions, when you deal with your customs and GST related provisions. So here, the transaction value will be tested between related party and unrelated party. I'll explain in detail when I come to section 15, subsection 1, which deals with your related party transactions. This read with rule 28. Then possible adjustments in transaction value impact on payment of taxes. This is one another transaction which we will learn under section 15, subsection 2, where the GST law gives a guidance. What all aspects I have to add for understanding what is my transaction value. Now, I'll give you some examples. We will just look at these examples as a fresh thought process. Don't conclude anything. Probably you would have answers readily in your mind. Your answer could be correct. I'm just giving these examples for us to reapply this provisions of section 15. First example, ROC annual payment or ROC annual filing fees. Professional chartered accountant who does the audit, who does the filing, ROC filing. This particular chartered accountant, he remits 300 rupees to ROC on behalf of a assessee. Assuming that there is a form called NGT5 or NGT7 which needs to be filed on behalf of a company. The chartered accountant says, sir, I've filled the form, I've given a guidance. My professional fee is rupees 5,000. I also paid a sum of rupees 300 on your behalf. When I, as a chartered accountant, when I bill to my customer, can I bill rupees 5,000 saying that, look, 5,000 is my professional fee. On this 5,000, please pay 18%. Or should I need to add this reimbursement of expenses of rupees 300? Now, this rupees 300 rupees, will it be called as a pure agent? Will it be called as a pure agent? Or can I call myself as a reimbursement of expenses? Is this a incidental expense? All these aspects, we need to have a clarity when we read our valuation related provisions. Now, please keep in mind, can a chartered accountant who is an independent professional who does render services to his client, can this chartered accountant be called as a pure agent? I would say this pure agency contract doesn't come into picture. Principal to principal, the transactions take place. Principal to principal, transactions take place. However, when some payments are made by the principal on behalf of his client, this concept of pure agent comes into picture where there is a transparency maintained to the recipient. There is a transparency maintained to the service provider. Like in this example, I have, say, chartered accountant X who happens to be a chartered accountant. ABC Limited happens to be a company who happens to be a client. I have Ministry of Corporate Affairs. I have Ministry of Corporate Affairs. Now, ABC Limited has to make the payment of rupees, say 300, for filing a particular NGT form. Now, when MCA receives this rupees 300, they very well know, though X, who happens to be a chartered accountant, makes the payment, like we have our PAN number under income tax, we have CAN number under ROC. On the basis of SIN, MCA receives rupees 300 rupees, where ABC Limited knows that MCA has collected 300 rupees. X says, so I paid on your behalf rupees 300 rupees. So here, there's a complete transparency. So when Mr. X claims a reimbursement from ABC Limited, this aspect of what is the definition of a pure agent, which is defined under Rule 33, I'll make you understand. If all those aspects of Rule 33 are satisfied, then we ourselves as a chartered accountant, we call as a pure agent for the purpose of claiming this particular reimbursement. So what if I fail one of the transaction? Can I still call this as a reimbursement? Answer would be probably yes, and we will examine how this will be examined for my GST purpose. I'll give one example before we get into the other example. I'll just give this example. Please keep in back of your mind. Students who are listening to me, please have your running notes. All these examples, you can make a note in your running notes. When we come back to our exam, the relevant provisions, you can examine and get the answer for these questions. Example number 1, a chartered accountant makes a payment of MGT form. Example number 2. Chartered accountant makes the payment of hotel accommodation plus travel in relation to stock audit. Why I gave these examples? These are couple of settled citations where the activity of pure agent is something which is tested for this particular claiming a reimbursement of expenses. Now, most of us as a professional, we do these particular transactions. I'll give a clarification when I touch upon Rule 33, how we will evaluate these two examples, right? I'll come back to my previous discussion. This is my example number 1. Example number 2, very, very important. See, at this point in time, all of us will have a pretty good answer. When we get into the business, like no, I call as a negotiation. Negotiation. Like post qualification, most of us, though we are a chartered accountant, when we become a CEO or CFO, we try to apply all our knowledge of income tax, corporate law, commercial law, GST, customs, where we can reduce the price from this vendor. This is how we apply our thought process. And this example has been picked up from this particular backdrop. Let us understand this example. So there is a contract for hiring of a DG set. There is a contract for hiring of DG set. Let's take an example. Say there is an entity called ABC Production House. ABC Production House. And I call them as service recipient. I have one more entity called XYZ Limited, who are the service providers. Now, this example, whenever there is a outdoor shooting takes place, we generally need to have power supply. For this particular shooting. Like assuming there is a movie scene which is being taken in a forest or in a particular resort, where we need to have this lighting, cameraman, focus, multiple things. Also for the caravan, we need to have this particular power supply. So this XYZ Limited, who happens to be the service provider, he comes and says, for this particular day, assuming you need 20 kVA power. So I'll supply my DG set. For this particular DG set, I'll be charging the fee. So you as a chartered accountant, you will say, how do you charge? Sir, my charges are like number of hours this particular DG set is given to you and whatever fuel I consume, both put together, I'll charge the amount. So now look at the way our negotiations start. We are, as a chartered accountant, we will start with our costing. You'll ask, boss, please give me how you're going to charge this. You say per hour, you're going to charge 3,000. Can you justify why you have to charge 3,000? Why it should not be 2,000? Then we will explain. Sir, I purchased a DG set, which is worth around 20 lakhs. This DG set has got a life of 5 years. So every year, 5 lakhs is my cost and I have to operate. And let's say I have to run those many number of hours. Every year I can run it for say 500 hours. That's how I get per hour 2,000 rupees as a charge. And my all manpower, etc. additional 1,000 I'm going to charge. In addition to that, whatever fuel consumption is there, on that also I'm going to charge. Now this is how the negotiation comes in. You will say, in the process of negotiation, you will say, look, I agree that you are charging 3,000. I agree that you are going to charge diesel. But when you look at section 7, read with section 9. Section 7 talks about supply. Section 9 talks about levy. Under levy, petrol and diesel is out of levy. Petrol and diesel is not subjected to GST. So why do you want to charge GST? Can you claim a reimbursement of diesel separately so that GST is not applicable? Now, for a moment, you are on the service provider side called XYZ Limited. Then you will tell them, sir, please understand there is a section 8 which talks about composite supply. Students, please make a note of these sections. Please note these references for this simple reason. I'm not testing your memory on sections. I'm trying to make you interconnect with all these provisions, how case studies are built in your examination. These examples, whatever I'm talking to you, this is how case studies are built in your final for 16 marks. Bare minimum 12 marks is how the questions are set. So here, XYZ Limited comes and says, so there's a provision called composite supply. I have to add my diesel, which is an essential activity for giving my DG set on head. You have given a contract for DG set on head. Now, without diesel, this cannot function. So this is part and parcel. So I have to charge on this particular diesel. So reading all together, negotiation is happening between these two people, where we will read provisions of section 15, subsection 2, which explains and which gives a clarity what is my value of supply. What is the intent of contract, which is a guiding factor under section 8, read with your section 15, we get an answer how we evaluate this particular value of supply. Moving further, third example. Now, this is another example where, again, learning from this example, where business, you give innovative ideas. I'll give this example this way. It is not businessman alone knows how to do business. As a chartered accountant, when we advise for multiple clients, some aspects we already learn in one company, we try to adopt in another company. So this example number 3, this is a gold bullion, where purchase of an ornament from a jewelry shop. Now, at times it so happens that we have ancestral jewelry. Now, some people have passion of jewelry. Some people are not passionate about jewelry. For a moment, say my father is not passionate about jewelry. My father has converted all inherited jewelry into a bullion. Now, what he has done, he made this particular bullion, which is worth, say, 500 grams. This particular bullion was given to me, rather my wife has got a gift from my father. So her father-in-law, or rather my father, gave a gift of this to my wife. Now, when we go to a jewelry shop to purchase a particular ornament, this jewelry shop fellow says the weight of this particular ornament is 600 grams. Now, I'll say, I'll make an offer. I'll make an offer to the jewelry shop fellow. What I'll say, sir, you're giving an ornament which is weighing 600 grams. I have this bullion which is weighing 500 grams. So what I'll do, I'll pay you cash for 100 grams. I'll give you this bullion for 500 grams. In this case, can I call this as a barter? Answer would be partially barter. I give you this, you give me this. But not exactly barter. Some portion of barter is kicking in. Barter takes place, where someone says, okay, I'll give you paddy, you give me vegetables. I'll give you sugar, you give me milk. So there could be exchange of item to item. But this is a semi-barter where the consideration is in cash, consideration is in kind. So in this case, what is that? I have to identify as value of supply. Section 15, subsection 2, section 15, subsection 1. These both are going to give a clarity. When I read section 15, subsection 1, read with rule 27, we get a clarity for this particular answer. So here, these are also permitted transactions. There is no tax evasion. These are all permitted transactions. Hope examples, whatever I have given is clear, ma? I'm going to get into the another aspect called definitions. Now, please open your institute material. Whatever examples definitions I'm going to explain, follow these examples from your institute material. There's a first definition called agent. Agent means a person which includes actor, broker, commission agent, arheta, del credere agent, or an auctioneer, or any other mercantile agent, by whatever name called, who carries on business of supply, or receipt of goods or services on behalf of another. When I say another, this person happens to be my principal. Let's take example of say L&T Siemens. Assuming that A1, A2, A3, these are all dealers. L&T Cement, when sells the cement to individual customers, this particular transaction, the supply which takes place by this gentleman is called as an agent. So here I have to understand the business model. I have to understand the business model. Based on the business model, where there is a principal and agent transaction, my transaction value is tested under GST for value. What is the value on which I have to pay GST? Next definition, consideration. Now, this is the hardcore aspect of your understanding. Let me come to institute material. Students, I recommend, I advise, I request all of you to follow the institute material, right? Reason, I'll just show you my slide. This is my definition of consideration. Now, if someone has to read this definition, reading English, reading this paragraph may be very, very tedious job. But look at the way our institute material was designed to explain this term called consideration. They have retained the original form of consideration. This entire original form was retained. Not only that, they made analysis of this particular definition to make you understand in a very, very simple format. So please come to page number 6.4, where my consideration is identified in two limbs. Limb number 1, where it says consideration means payment in money or otherwise for supply. So there is a payment in money or otherwise. Money in terms of money or otherwise. So what do you mean by this? Seller says the cost of commodity is 10,000. Where cash is collected for 7,000. Old used goods are collected for 3,000. This could be a mode of communication where I say my consideration is in terms of money or otherwise for the supply. Right? This is one way of consideration. The other way, when I look at my consideration, law says it could be monetary value of an act or forbearance. For the supply. So here they say, if you refer schedule number 2, there is a reference to this activity called tolerance of an act, tolerance of forbearance. So here, whatever is the monetary value for act or forbearance. In simple terms, I would say tolerate. Like, sir, what is the example? I'll just give an example. Need not be that you have to use this particular example for valuation. Say, I have given employment to Shruti. Shruti joins as a senior vice president in my company. The salary of Shruti is 50 lakhs per annum. I have taken Shruti on my role with the condition. Look, Shruti, you have to work with me for 3 years. If you break the contract between, then you have to pay me 10 lakhs as a bond breaking down. Now here, the activity of Shruti leaving the organization within the span of 3 years, I call that as tolerance. Monetary value of any act or forbearance for the supply. Now here, I'm not calling this as a supply. I'm just giving an example. Employer, say XYZ Limited, when they take Shruti on payroll and Shruti leaving in between, the value of this supply is called tolerance value for 3 lakhs. Example number 1. Example number 2. Say, I construct a particular factory. Now, when I do construction, there is something called pollution you have this chimney, pollution chimney. Say there is a school, there is a factory. There is a school, there is a factory. Now, factory, as per factories pollution control norms, there is a chimney. There is a chimney at a height of 150 meters. 150 meters. School says, look, this is not sufficient. Please increase by another 10 meters. Reason? This air is getting polluted. A lot of dust is getting accumulated in our school play area. So I don't agree for this particular height. Now, by request, by force of the school, this particular factory has increased their chimney by another 10 meters. Monetary value of an act. Where the cost of increasing the chimney by 10 meters, I call that as monetary value of an activity. Again, this is one another example where there is no supply, or there is a supply where the consideration is not identifiable as money. Rather, there is an activity of tolerance, there is an activity of monetary thing. Third example, which is little blunt example. A says to B, saying that, look, C is a singer. Say, I'll put it this way. A and B are neighbors. A and B are neighbors. A happens to be a singer. B has there is no healthy relationship between A and B. B is a neighbor who finds for an opportunity to disturb A. Assuming for a moment, there's a particular event where A has to travel to Singapore to perform in a particular event. So here, B engages C, where B says, when A is coming out of the house, you sneeze. C says, okay, A is very, very holistic. He looks at Vajra, Murta, all religious customs he follows. The moment A is coming out of the house, C intentionally goes in front of his house and he sneezes. A goes back, waits for 5 minutes. Again, when A is coming out of the house, C leaves a black cat. Now, all this is the instances done on the instruction of B by C. Now, this is called monetary value of an act, where there is a supply, the amount paid by B to Mr. C, which is called this monetary value of act. These are a couple of examples where I understand the supply takes place in terms of money, which is readily identifiable. There is something called activity or forbearance for what? Which is paid by the recipient or any other person. So there is a transaction where consideration is paid in terms of money, consideration is paid in terms of an act or forbearance. This is paid by recipient or any other person. Now, look at the beauty. Money could be paid by recipient, money could be paid by any other person. So, who is this any other person? Who is this any other person? Probably agent, probably pure agent, or probably vendor, probably customer. There are various people who make the payment on behalf of a recipient. Like example, say M, a job worker, M who is a job worker, ABC Limited, who is there in Singapore. M sells its goods to ABC Limited. This particular company, this is under warranty for 2 years. Say there is a repair for this particular machinery which is received by ABC Limited in Singapore. XYZ and Co is an entity who is there in Singapore. Now here, because this is under warranty, assuming spare parts are supplied by this entity to this particular entity for machinery. Only for spare parts, money needs to be paid. Instead of M making the payment directly, he asks the recipient to make the payment directly to XYZ and Co. There could be tri-party transactions where this money is paid either directly by the recipient or by any other person. Now, these are certain aspects. Again, this come where you as a chartered accountant, you want to say forex gain or loss. Forex gain or loss. These are the circumstances where you try to apply your buddhi once you get qualified and once you become an advisor. Please keep in mind, my valuation provisions have taken enough care to take care of all these aspects. The only element which is excluded, deposit to be considered as a payment only when the supplier applies such deposit to as a consideration, excluding subsidy. Now, these are two aspects which you have to keep in mind. Deposit. This is excluded from my consideration. Similarly, subsidy given by state government or central government. Now, these two are the aspects which are kept outside the purview of consideration. Outside the purview of consideration. To give an example, rental deposit. The money I receive from my tenant, the moment I receive as a rental deposit, debit bank account, credit my current liability. I park this as a deposit received from my tenant. Until and unless I appropriate this rental deposit as a consideration, as a payment for my lease rental, this is not to be called as a consideration. Wait and watch for one MCQ or one case study on this particular aspect called deposit. Second aspect, there is an exclusion of subsidy given by state government or central government. So any money received as a subsidy from central government or state government, this again excluded from consideration. So why do we read this particular definition? Consideration is relevant for my value of supply. Consideration is relevant for my value of supply. So can you give an example for this state government, central government subsidy? The example is like this. Let's assume for a moment XYZ Limited, who is into catering business, who's having a catering business. XYZ Limited, they run say Janata Mess. There's a canteen called Janata Canteen. Where, for a moment, meal is supplied at the rate of rupees 20. Any public can walk in, have a meal, pay 20 rupees and walk out. Now, for a moment, this Janata Canteen is identified by a state government. Let us assume that Andhra Pradesh state government has identified this Janata Canteen, saying that, look, you are doing a public service. I'll give you a subsidy of rupees 10. So, whatever meals you sell from the customer, don't collect 20 rupees. You deduct this subsidy of 10 rupees. Collect only 10 rupees from the customer. Now, in these cases, though 20 rupees is my consideration. Now, it so happens that as XYZ Limited, what I will do, if I have sold 1,000 meals in a day, I record 1,000 into, sorry, I'll just erase this. How do I get this consideration? Cash, 10,000 meals into 10 rupees. Similarly, subsidy, I receive for 1,000 meals at the rate of 10 rupees from the state government. This is going to be my total consideration. So, assuming I receive 10 lakhs during a particular period, 10 lakhs is what I have to show in my returns, 10 lakhs is what I have to show in my IT return, 10 lakhs is what I have to show in my profit and loss account. But here, for the purpose of GST, they say, ignore this subsidy received by the state government or central government. Consider only this for the purpose of GST. So it so happens that eventually Income tax and my profit and loss account, if it shows 10 lakhs, my GST return shows 5 lakhs as my consideration. This is my importance of this definition called consideration under GST law. Hope this example is clear, students. And look at the institute material. Green color, include. Green color, include. Orange color, examine whether this is forming part and parcel of your definition called consideration. This is the reason I say, please follow your institute material. They have done a fantastic job in terms of explaining this particular aspect. I'll come to the next definition. My next definition, market value. Market value. Market value. This is another definition which they have explained. Let me see if there are any questions before we go further. Now, market value, they have explained this, full amount which a recipient is required to pay. This is a starting point. My market value is nothing but full amount. Full amount. Now, what is this? This is the amount recipient has to pay. Recipient has to make the payment. For what? For what? Why should I pay? To obtain goods or services. To obtain my goods or services. So what if there is a I'll just read this institute material and I'll explain this. Look at the definition of your market value. Market value means full amount which a recipient of a supply is required to pay in order to obtain the goods or services, or both of like kind and quality, or about the same time and value at the same commercial level where recipient supply are not related. So here they're saying that I look at market value to identify the supply. Also, when you look at this particular aspect, these goods are like kind and quality when I compare. They are saying that when I look at this transaction, when the goods and services are obtained, I should have comparison of these goods and services of like kind and quality. I gave example of laptop which Virat sells to Praveen, laptop which Virat sells to Mansa. So when I compare laptop sold to Praveen, laptop sold to Mansa, both should be of like kind and quality. Both should be of like kind or quality. What else is required? At or about the same time. Month one, the laptop is sold. The same month it is sold to Mansa. When I compare sales price to Mansa and Praveen, now it could not be compared. The GST officer cannot compare the laptop sold to Praveen in September vis-a-vis the laptop sold to Manasa in December. Reason, the time value of money, of seasonal offers which are there in September may not be compared in December. So they say when you examine market value, please examine two transactions which are like kind, which are like quality, which are about the same time. Also they say which are at same commercial level, where recipient and supplier are not related. If it is unrelated party, I call this as market value. This is relevant for my value of supply. I'll give an example for you to have a better understanding. When I talk about this value of supply, I'm talking about market value. I'll put the transaction. Customer 1, customer 2, remarks, or I'll say additional inputs, then conclusion. Scenario 1. Scenario 1. Sale of laptop. Sale of laptop. To customer 1 during September 22. To customer 2 again during September 22. Say for rupees 20,000. For rupees 18,000. I will put it this way, inputs. Customer 1 purchased black color laptop. Customer 2 purchased blue color laptop. Now here, can I compare sale of product to customer 1 to customer 2? I would say it is like kind, like quality. Only thing, there is a slight change in the color. Now, customer 1 purchase a laptop which is having i5 processor. Customer 2 also purchase i5 processor. The hard disk of customer is 512 SSD. The hard disk of customer 2 also is 512 SSD. I would say in those cases, I would say this is my market value. If C1 and C2 are unrelated party. This is my scenario number 1. Scenario number 2. Sale of oil. I'll say cooking oil. To customer 1 during September 22, 100 liters at 32 rupees per liter. 32 rupees per liter. I sold the same oil to customer 2 during December 22, or I'll make very simple, September 22. I sold, instead of 100 liters, I call, during September 22, I sold 2 liters at the rate of 35 per liter. 35 per liter. Now here, can I call this as a market value? This is what we are trying to examine. Now, if I compare customer 1 to customer 2, question comes here. Can I compare customer 1 to customer 2? Can I compare? Answer would be, so definitely I cannot compare. Reason, economies of scale. The relative quantity, the relative size, the product sold to C1, the product sold to C2, both vary. So the 100 liters when I sold in bulk, 2 liters when I sell in retail, obviously there is a change in price. Obviously there is a change in price. So I can say, I cannot compare C1 with C2 for market value purpose. Then my remark conclusion would be, can't compare for market value. This is my conclusion. Similarly, scenario 3. Sale of oil, say for C1, during September 22, 100 liters are sold at the rate of rupees 32 per liter. Customer 2, during December 22, 100 liters were sold at the rate of rupees 30 per liter. At 30 per liter. Now, can I call this market value of C1 comparable with C2? Is it same point in time? Sir, I sold in September. I sold to this customer in December. October, November, December. 3 months gap came. So there was a foreign exchange fluctuation. Like the rupee has appreciated, the dollar has depreciated. Where I was in an urge to buy this particular oil at a better price. Reason number 1. Reason number 2. Sir, I have economies of wholesale purchase from my manufacturer. Considering these reasons, it is not comparable for market value purpose. I'll say not comparable for market value purpose. This is how I compare my example of market value. Students, please keep in mind, this example, what I have given to you, the same example is relevant under customs law. in customs law, when I deal with valuation, how the customs officer is going to examine a particular consignment at a particular point in time, vis-a-vis another consignment in a particular point in time. Like, just to give one example, say Mansa has imported 10 laptops in September. Viraj has imported one laptop in December. Now, if like assuming Viraj has imported in September and Mansa is imported in December, Viraj has imported it 1 lakh. Mansa has imported it 90,000. Now the customs officer wanted to say, look, Viraj paid 1 lakh, you're paying only 90,000. I want to add this 10,000 because I feel this is not at market value. So here, my definition of market value says for you to compare the aspects which are relevant is it should be at same point in time or more or less. It is not exactly. If I sold on 11th July, I should compare with 11th July. If I've sold on 11th July, I could have compared with 12th July, maybe 15th July. At or about. This is what they're saying. At same commercial level, this is the next aspect they're saying. I should be having at same commercial level for comparison purpose. These are the relevant aspects for my market value. Moving further, money. The term money has been defined for us to understand how this aspect has to be understood. Money is the last definition we will discuss. Then we'll start with section 15. Money means Indian legal tender or foreign currency, check, promissory note, bill of exchange, LC, draft, pay order, traveler check, money order, postal or economic remittance, or any other instrument recognized by RBI. The term recognized by RBI is important. Recognized by RBI. When used as a consideration to settle an obligation or exchange with Indian legal tender or any other denomination, but shall not include any currency that is held for numismatic value. Like when I say numismatic value, these are old used currencies, old currency, not in existence. Like example, let's think about 1,000 rupees note. Now, after this demonetization happened, my old 500 rupees note, old 1,000 rupees note were banned. As on today, for a moment, say Rahim holds 1,000 rupees note for 5 notes. When Rahim goes to a shop to buy a shirt, cost of the shirt is say 2,000. Rahim cannot give old 1,000 rupee notes for 2 numbers, which are called numismatic value. Rahim is out of 11, as a passionate, he has a tendency to collect this old denominated currency, like postal stamp papers or these currency notes. These are all called numismatic values. I have RBI approved 1,000 rupees, a point in time which is not or no more recognized as a money as on today. Now, this is my simple definition of money. Can you guess what is excluded here? As on today, as on current date, what is the consideration not recognized by RBI, which could be exchanged as a consideration for settlement of obligation. I'll give you a minute. Just think and let me know what is that excluded, which could be tested in your examination for 1 mark MCQ. What is that item? What is that aspect which is used as a consideration, excluded, not recognized by RBI? What could be that item? Very important. All of you, when you file your IT return, you would have come across these transactions in 26, not 26 years, probably AAS and TAS, probably. Think perfect. Manan Kandilwal has given an answer. Cryptocurrency. Cryptocurrency is one currency which is not recognized by Reserve Bank of India as a currency for exchange, for settlement of obligation or exchange in Indian legal tender. So cryptocurrency is one aspect which could be tested for 2 marks in your examination when we deal with your transaction. Students, we are at 7:25. I'm going to start with section 15. Let's have a break for 10 minutes. Let's have a break for 10 minutes. We'll continue with our discussion. 7:35 or 7:40, we will resume back. Welcome back. Let us start with our discussion on valuation, section number 15. Please have your institute material in hand. Refer the provisions of section 15 along with me as you take you through the provisions. Okay? Page number 6.8 onwards. Section 15, page number 6.8. Now, my section 15 has been divided into 5 subsections. Like we have Panchashil the 5 fingers, we have 5 discipline aspects for valuation. First and foremost, they started with this is an overview of your section 15. They started with some basic aspect called section 15 subsection 1. Look, I take the value, what you have declared as a transaction value, as a value with some riders. Very, very simple, very plain vanilla explanation where they say in a simple English what you mean by transaction value. If at all, if they say it should not be a related party transaction, money should be the whole consideration. When I fail to meet any of those two conditions, I travel to subsection 2, where what I will do, whatever the assessee has identified in subsection 1, I add something, which is called value to include. I repeat, assessee comes with a basic value, which is called transaction value. This is my starting point in subsection 1. The officer may reject this particular value for various requirements which are not met in subsection 1. Then he will travel to subsection 1 to add something. This is covered under my subsection 2. This is my addition. Subsection 3, I deduct something called discount. Whatever transaction value we have seen, from the transaction value, I get a liberty, I get a wisdom to subtract something. So this I call as a deduction from my transaction value. Then manner to be prescribed. In few cases, the government will prescribe what is the manner in which the transaction value has to be adopted. So government at liberty, it prescribes that for these transactions, this would be the value. Also, there is an ancillary power retained by the government. Generally, you see valuation, you see exemption, valuation, exemption. All this will be subjected to some terms and conditions. Levy, valuation, exemption. So this is something which is covered under subsection 5, where government has a power to notify something called as a transaction value. So this is my overview of section 15, subsection 5. Now, we will start with simple definition 15, subsection 1, which deals with my transaction value. The provision says that, look, the value of supply for goods or services or both shall be the transaction value. Shall means compulsory, mandatory. The value of supply shall be deemed to be the transaction value. Now, if some of you have a doubt, what do you mean by transaction value? I would say the value as per your contract, the value which is as per agreement to sell, the value which is written on a piece of paper is called as transaction value, which is price actually paid or payable, money paid, money payable for the sale supply of goods or services or both, where supplier and recipient of the supply are not related. Condition number 1, there should not be any related party transaction. And compulsory. And Price is a sole consideration. Price is a sole consideration. Other than price, other than money, there should not be any other consideration. So when we talk about consideration, they're saying that money should be the sole consideration. If that is not made, price is not the sole consideration, then I fail to apply this particular subsection 1. I fail to apply this subsection 1. So the conditions relevant for us to understand, students. 1, it should be an unrelated party transaction. Second, price should be the price or money, I would say. Money should be the sole criteria for the purpose of this particular valuation. If this is met, officer would accept my value as transaction value. Transaction value is a value quoted for supply. Supply and recipient are not related, and price is a sole consideration for that particular supply. Now, Mansa is having one question. Our government is interested in legalizing crypto. All G20 members have agreed to find risk and mitigate the risk arising from crypto. Recently, I think current month, IMF issued a paper regarding this. Crypto is a threat. Crypto is a risk for all the economies, Mansa. They cannot eradicate, they cannot avoid crypto. So for that reason, at the same time, they cannot accept also. I repeat, crypto cannot be eradicated from the system. At the same time, crypto cannot be adopted and accepted in the system. So this is very, very highly unregulated, uncontrolled, and most passionate mode of settlements. Because advancement of technology changed the way the dynamics of businesses are working. The technocrats are using cryptocurrency as a mode of settlement. It is becoming pretty tough, pretty difficult for them to eradicate this sort of settlements. If you've heard of something called blockchain technology, this is one particular aspect which was backed up with this mode of settlements. So for that reason, even under income tax, they say we would legalize as a mode of income where thought process is being identified for levy of GST on settlements made through crypto system. So this is a wait and watch aspect, Mansa. We have far way to travel to digest and understand this aspect of cryptocurrency. Now, in the previous slide, I explained something about related party transaction. Let us look at this aspect of related person under GST. Borrowed from income tax, simplified for our understanding. My related party transaction, I can identify in 3 limbs. I could be related by virtue of blood connection. I could be related by virtue of artificial bonding, not a blood relation, artificial bonding. I could be connected by virtue of exercise of control, which is a legal mode of relationship. So there are 3 aspects or 3 modes where I could be connected. Blood relation, most of us are aware. I'm coming to the next bucket called artificial bonding between the persons. How is this artificial bonding? Like one person is legally recognized as partner in business with another person. So transactions between a firm and partner, related party transaction. Now, this is not a legal thing. Artificial bonding, partner and partnership firm are inseparable. Employer-employee, inseparable. Persons of officers or directors. Officer or director of a particular business. They're also a related party by way of a bonding. This is a way of identifying my relationship. Third bucket of relationship by way of a control, where person directly or indirectly can own or control, owns, controls, or holds 25% or more. 25% or more of the the outstanding voting stock shares of both of them. Examination, please expect 1 mark MCQ from related party transaction where valuation will be affected. XYZ Limited holding 20% shares in ABC Limited. When there is a supply of goods from XYZ Limited to ABC Limited, the assessing officer has not accepted the transaction value, stating that they are related party transaction. Where you would say, answer is false, incorrect. Reason, I should have 25% or more, minimum 25% to be called as a related party transaction. Holding 10% is not getting into the definition of related party transaction. So mere holding up to 25% related party transaction does not get triggered. Does not get triggered. Please wait and watch for 1 mark MCQ question on related party. Not only this. I'll share one example practically where most of you would have come across. The GST audit, when the officer is conducting an audit, beginning of our session, Mansa has asked one question with respect to section 7, subsection 1, clause B with respect to import of service. Sir, what happens? Where I'll just insert one slide. Just give me a minute. I'll give this example this way. Say XYZ Limited. This is a registered person in say Kerala. When you look at the composition of shareholding, A Limited, like I'll assume that all these are foreign entities. A Limited, B Limited, C Limited. So these are all entities from US. Entities from US. A Limited holds 50%. B Limited holds 30%. C Limited holds 20%. Recently, May 2022, there is a Supreme Court judgment in case of Northern Operating System Limited. There's one Supreme Court judgment where Honorable Supreme Court have said that salary paid to expat is considered to be called as a import of service. Import of service. Now, here, this particular transaction, where for a moment the GST officer want to examine related party transaction, where he says, assuming I pay 20 lakhs as salary for employees deployed by A Limited, I pay 15 lakhs salary deployed by B Limited, I pay 30 lakhs salary expat employees deployed by C Limited. My composition of total salary, 65 lakhs is a salary I pay to expats who are deployed by ABC Limited. Now here, consideration. When there is a related party transaction, the transaction value is set aside, not accepted. Now there is a valuation rules where notionally assuming that 10% is acceptable as the transaction value compared to the market value. Now the GST officer says, please add 10%, please add 10%, please add 10%, but notional adjustments. Now here you will tell to the GST officer saying that, my dear officer, under section 15, when you talk about related party transaction, 25% or more is a criteria for holding. Now in this case, A satisfies related party transaction, B satisfies related party transaction. C Limited is not satisfying related party transaction. So this, whatever 30 lakhs I have paid, you have to accept this transaction value and you should not demand anything more than what I have already paid. This is what we need to understand from this definition of related party transaction, where 25% or more, where 25% or more is relevant for us to understand. Right? This is what we need to understand. Let me see, there are any doubts so far. Viraj is asking, sir, what is cryptocurrency? Okay. Viraj, this is a mode of settlement other than the legal mode of currency recognized by any nation, recognized as of today. As of today. Like to give an example, say I wanted to buy a particular book which talks about how to develop a code for payroll computation. Now, this book is available in an electronic form. So when I have to buy the book, it says the price is $100. $100 is pretty big amount. It doesn't want to pay, it doesn't have that money. Cryptocurrency is a parallel mode of currency where when you do a private job, someone makes the payment to you in cryptos. That crypto is like a digital money, which is parallel to the existing legal money. So this is, as of today, Viraj, this is money which is parallel to RBA recognized money. So if I have to pay, like assuming I give a tuition to you, you have to pay me 10,000. Instead of paying INR 10,000, you give me cryptos worth 10,000. Now there is a legal currency exchange value where I'll say, okay, you pay me $10. Now there is a communication where cryptos designed and designated in dollars, settled as a consideration other than the legal money. Rather than actual money, the digital money is being paid. Now, Section 15, the value of supply for transaction value. Supply should be between unrelated persons. Price is the sole consideration. Then value will be considered for transaction value. The beauty of institute material. This answer, this slide, sole property of Board of Studies, I have picked up from there for the purpose of understanding. Whenever I see these kind of presentations, I always guide students to watch, to read the Board of Studies material. Most of times, students do message me, sir, what do you advise to read other than institute material? My advice, read thoroughly institute material, read the Bare Act. Read thoroughly the institute material and read the Bare Act. Reason, when you read the Bare Act, it is too technical. When you read the institute material, they have put the Bare Act, also they have simplified for us to understand by way of pictorial presentation. If you want to practice problems, take a previous year RTPs. Those are good enough for our examination point of view. 15 subsection 2. My 15 subsection 2 is again like a punchy where it says value to include something called duties and taxes. So when you talk about your value of supply, point number 1, if there are any duties and taxes paid, please include that part of your supply. Point number 2, responsibility taken by the recipient on behalf of the supplier. If there is any responsibility for providing the goods or services or making the payment on behalf of the service provider. For this responsibility, please remember the example number 1, where a trust which wanted to construct a auditorium for its school, where the trust took a responsibility to purchase cement. Rather, they didn't purchase cement. They sourced the cement and they given as a donation. Whatever donation is received, it was given to the supplier. Right? Third, incidental expenses. When I talk about incidental expenses, remember the example where I gave Viraj, who sells the laptop to Mansa, where he says 20,000 is the worth of laptop, 2,000 is my insurance and freight to deliver in Kerala. Incidental expenses. All those expenses which are relevant, which are incidental to the main supply, has to form part of my value of supply. Late fees, interest. This late fees and interest I have discussed at length when we discussed a chapter on exemptions under GST law, where I have said what all have to be forming part and parcel of my inclusion under GST. I gave one example in relation to late fee, where goods are sold for rupees 50,000. Credit period 30 days. Say if there is any default, for this default, there is a penal interest at the rate of 12% per annum. Now, assuming the seller recovers said nominal amount 2,000 rupees as penal interest, Now, we discussed under GST law something called interest or discount recognized as consideration for extension of loans and deposits by a bank or financial institution. I didn't say bank, or for the purpose of loans and deposits, loans and advances. In the case of this money exchanged by way of loan, advance, or deposit, where consideration is recognized by way of interest or discount, is exempted under GST. But when I say that particular example, I came to section 15. I also say this example where my principal supply under section 8 is sale of goods. Because sale of goods are there, I'm in a position to recover something called penal interest. This amount of penal interest which is collected, which is recovered, is extra consideration in relation to sale of goods. Accordingly, this penal interest is also taxable under GST. This is what we have learned, section 12, subsection 4 of section 15, subsection 2, clause D. Clause E talks about subsidy. Any subsidy received other than from state government or central government should be forming part and parcel of my value of supply. I'll just explain these with some of examples. Just give me a minute. Now, this value of supply, I'll give example this way. Service provider. Okay. When I explain this, please keep in mind, students, when I talk about duties and taxes, this is other than GST. When I talk about responsibility, this is what done by the service recipient or recipient of goods on behalf of the seller. Incidental expenses, there's nothing to worry. Subsidy, this again, like clause E, this is something which is other than from central government, state government. I'll give examples for you to understand these aspects. So there is a service provider XYZ Tours and Travels. There is a service recipient called ABC Limited. What is the activity? There is an activity of renting of motor vehicle on hire. Service provider is in the state of Uttar Pradesh. Service recipient is in the state of Haryana. Now, the service provider picks employees from Uttar Pradesh, picks employees from Haryana, also Delhi NCR region. Now, most of you would have known people who are from North India, Gurugram. There is a place in Haryana called Gurugram, where this place, Gurugram, employees travel from Noida, employees travel from Delhi. Also, there are people from local, where part of this employee pickup and drop facility, the service provider has to have a travel facility of pickup and drop from all these particular regions. In this scenario, there's something called road permit. Road permit. Road permit. Now, this service provider is in the state of Uttar Pradesh. So he has to take additional permit from Haryana. Also, he has to take additional permission from Delhi. The transport vehicle which passes through interstate, unless there is a road permit, the vehicles are not permitted. So here, this is one particular example called road permit. Second example, say there is something called, say, vehicle fitment test. Now, these are charges like this license, like uh, like this license number one cost rupees 1 lakh per month, and vehicle fitment test charges cost 20,000 per year. 20,000 per year. Now, this service provider called XYZ Tours, when they bill to ABC Limited, they have to include in their tax invoice, assuming that this is the tax invoice. This is a tax invoice. I'll say serial number one, activity, amount. Serial number one, renting of motor vehicle. I'll say 2 lakh. Serial number two, my road permit charges. Say 1 lakh. Total value of supply 3 lakh. GST at the rate of say 12%, 36,000. Total value 3 lakh 36,000. This is how I derive with my value of supply under section 15, subsection 2, clause A, where it says include all duties and taxes paid under any law other than GST. This is my example number 1. Students, please let me know if you have any doubts in this particular example with respect to section 15, subsection 2, clause A. Please let me know. Are we clear, ma'am? Mansa is asking this question. A GST Council is having a view to tax corporate guarantee. She wanted my view on this particular thing. Definitely, Mansa. I'll maybe before we wind up, I'll touch upon this aspect. Connected to what Mansa is asking, my advice would be, please be updated for your examination. Read the recent amendments in tax laws. Read whenever there is a GST Council meeting, whenever there is a budget, whenever there is the treaties like the G20 summit, etc. happens. From academical point of view, from your professional career point of view, please come back with your learning. What is that it is going to impact the industry? What is that it is going to help a particular businessman, right? Mohammed Abdul Rahim says, Venezuela has accepted Bitcoin as legal tender. I'm not aware, Rahim. This is news to me because none of the nations have made an attempt to accept this as a legal tender. Rahim, this I don't know this news from where you got, but there is no admission by any of the nations for adding cryptocurrency as a legal tender. Reason Once you, like, see, as I said earlier, like, no, I cannot say no, I cannot say yes. The position taken by our Honorable Finance Minister is very, very noble and thought process, recommendation. Like, one point, since you brought this point, I'll add this way. People are listening to me, post your qualification, once you have to, out of your zeal, if you happen to appear for civil services, you get through your IAS or IRS, and you join this national, this finance ministry, any position in the finance ministry, you get recognized because of your expertise in this tax laws or economic laws, where you will be part of economic advisor to the finance ministry, wherein all these aspects which you are reading, which you are making a judgment why this has to be done this way. This will help for the government as such to formulate regulations. One of such advisory is from economic advisory, tax cryptocurrency. Means don't eradicate. Now, like, I cannot stop people trading. So people who are doing trading in that, because there is a exchange through which this currency is happening, so let us tax at the rate of 30%. Government is getting money. I cannot at the same time recognize it as a legal tender. So this is one wise advice taken by Honorable Finance Minister. There's one question from Mohammed Abdul Rahim. So vehicle fitment charges will not be added. Probably, like, I'm just giving an example, Rahim. Like, if at all, if I just gave a parallel example to a duties and taxes. Vehicle fitment is in routine course. Probably road permit is one example. You can take it up, right? Second, I spoke about your 15 subsection 2 clause A, which talks about your rates and taxes. Then something called free of supplies, which we have already discussed in case of a example of a trust. Please remember, like, the service provider who happens to be a contractor and service recipient who happens to be a trust. This trust receives donations. So instead of donation, it asks for cement and paint, which needs to be supplied to the service provider for making a supply. So here, as a contractor, to construct a building, unless cement is there, I cannot do this activity. So here, if the contract between service provider and service recipient is a composite contract of construction, please keep in mind, section 15, subsection 2, clause B talks about all these activities done, which is not added by the service provider. Any amount that supplier is liable to pay in relation to such supply. Now here, in case of school example, what we have discussed, my construction cannot happen without cement. So here, when I have an intent of construction, this is like, no, service provider is liable to pay, but which is incurred by the recipient. Then they say, please add back on these things. This is what subsection 2 clause B says. So here, assuming whole value, sorry, let me just clear this. If whole value is rupees 2 crore 50, I'll say 2,50,000, just for hypothetical exemption, less paid by trust, say 28,000. 2,30,000 is what actually received by service provider. Now, when I raise a tax invoice, in my tax invoice, I'll mention this way. This is my particulars. This is my amount column. where I'll say value of supply incurred 2,30,000. 2,30,000. Free supplies. Free supplies under section 15, subsection 2, clause B, 20,000. Value of supply for section 15. I'll say 2,50,000. GST at the rate of say 12%. I'll just make a hypothetical thing and I'll add and I'll say total value. I'll derive for total value. This is how I calculate my value of supply. Are there any doubts? Students, are there any doubts, ma'am? Can I go ahead? 15 subsection 2 clause A clause B. Are we clear so far? Aniket says cryptocurrency is a scam. It's totally money generated out of air. While crypto technology has a lot of potential in public welfare. Completely agree with you, Aniket. Absolutely correct. Absolutely correct. Let's come back to our discussion. Clause C. Clause C is a straightforward incidental expenses. All incidental expenses, including commission, packing, charged by the supplier to the recipient of a supply, and amount charged for anything. Amount charged for anything done by the supplier in respect of supply of goods and services of both at the time of or before. At the time or before. At the time or before. Goods and services are supplied. Goods and services are supplied. Now, clause C, not much complexity is there. I gave this example of laptop. Laptop sale at shop rupees 20,000. Delivery charges rupees 2,000. Then 22,000. Total 22,000. This is a plain example of this clause C. Now I'll increase this complexity by way of an example. This way. Let me come back to my PowerPoint. Incidental expenses. Now, I gave two examples in relation to chartered accountant services. Scenario 1, scenario 2. Chartered accountant gives his professional service for ROC filing. Chartered accountant gives his service to a bank for stock audit. Now, advisory and form filling. Professional fee is rupees 5,000. NGT charges. Say NGT 7 charges. Some form. Let me say NGT 7 charges. Some 300. Similarly here, conducting stock audit. The charges are rupees 5,000. The charges are rupees 5,000. There is a standard checklist. As per the checklist, the stock audit will be done. Physical verification of stock, insurance, then your sundry data's verification. Then we have various your valuation, bills verification, lot of things are there. Now, in addition to this, the chartered accountant incurs something called travel expense, then seafood expense. Travel expense and food expense, both put together, say 600 rupees. Now, please be very, very careful in understanding this example. Most of you, in the process of your internship, you would have raised a bill on behalf of the principal to the client. Okay. Here, Mansa, I'll come to your question in a while, ma. I'll come to your question in a while. Very good question. I'll touch upon that also. So here, can I call this 300 as incidental charges? Can I call this travel and food as incidental charges? Please give your answer for scenario 1, scenario 2. Scenario 1, not incidental. Scenario 1, incidental. Scenario 2, not incidental, incidental. You can just write S1-I or NI. S2-I or NI. Incidental or not incidental. Let me have your thought process and then give clarity in this regard. Examine. Scenario 1, is it incidental? Scenario 2, is it incidental? Scenario 1, not incidental. Scenario 2, not incidental. Examine both and give your answer, ma. Aniket gave his answer. I'll wait for a couple of other answers and then we will discuss. Quick. Give your answer. We'll discuss. Okay. Scenario 1, Aniket says not incidental. Scenario 2, he says incidental. Rahim also says scenario 1, not incidental. Scenario 2, incidental. Both of you are correct. I completely agree with your understanding. So here, my professional engagement is only to assist, guide, or support in terms of filing this particular NGT form. This amount, whatever is incurred, it is not the professional chartered accountant burden. So I would say this 300 rupees, not incidental charges. When I say not incidental, section 15, subsection 2, clause C. Not to charge GST. Not to charge GST. So as a chartered accountant, when I have incurred some amount, which I am recovering from my customer, if it is not incidental, then this clause C is not asking me to charge. Similarly here, scenario 2, can I give a stock audit? Can I render stock audit without travel, without food? Answer would be no. Answer would be no. This is incidental. This is ancillary. Incidental or ancillary for supply. For supply. So what I would do, add this 5,600 on this 18% GST. Now, most of you would have come across your internship. Sir, we are claiming bills at actual. We are claiming bills at actual. So don't charge GST. Now, this is what banker will ask. This is also we do saying that no, not to charge GST. Please remember, if it is incidental, my section 15, subsection 2 is asking me to charge GST on that. Right? Now, one interesting question, Mansa is asking. I really appreciate this points which you're touching, Mansa. Very interesting aspect. She's asking, so what happens to TCS? What happens to TCS? TCS under income tax. This is under income tax. 2022, I remember 2022, there was one provision under income tax where sale of motor vehicle having a value exceeding 10 lakhs, TCS is applicable at the rate of 1%. TCS is applicable at the rate of 1% on total value. So here, question came. Sir, value of motor vehicle is set 10 lakhs. GST at the rate of 28%. Let us assume it's just 28%. 2,80,000. My total value becomes 12,80,000. On this is my total value. Now income tax comes into picture. TCS at the rate of 1%. So what I will do? 12,800. 12,800. This is what my TCS I have to recover. Now when I read section 15, subsection 2, clause A, it says any taxes other than GST. Now question came here, unless I charge GST, I cannot come to this figure. Once I know 12,800 is TCS, on this again 28% I have to charge. If I charge on this, again that amount should be added back to this total value. Now in Excel, we had something called circular reference. There's a technical glitch called circular reference. I can never solve this particular math. So for that reason, TCS is kept out of the purview of this inclusion by way of a circular. So answer to your question, Mansa, TCS will not be considered for this clause A. Right? This is the answer to your question. Students, any other doubts, please let me know. I'm thoroughly enjoying explaining these concepts. Reason, some of you are well connected with these provisions and the questions which you're asking, like Rahim, the way he is asking with respect to vehicle fitment test, Mansa, she was asking, and cryptocurrency, some of questions what you're asking. This is how your vibrant learning should be there. Coming clause D, this already I have explained when I have touched upon exemption. So I'll skip this particular clause D. Clause E, subsidy is directly linked with the price, excluding subsidy provided by state government or central government. I'll come back to my presentation to explain this example. Clause E, section 15. Section, let me just add this. Section 15, subsection 2, clause E, subsidy. I give an example this way. Say there is a seller called XYZ Systems. There's a buyer. Called B1, B2, B3. XYZ sells laptop. Say, let's assume that this is a basic model laptop, home user version, basic laptop. Buyer 1 pays 40,000. Buyer 2 pays 25,000. Buyer 3 pays 40,000. Now, if you look at buyer 2, so why is that there's a special treatment? Buyer 2, the remaining 15,000, 25,000 is paid directly to the shop person. 50,000 is received by way of a subsidy from, say, TCS, or I'll say HCL. HCL is a software company, is a listed company. HCL as a corporate social responsibility, as a part of social responsibility, CSR activity, they identify a particular district, or I would say identify a particular place, identify a particular seller, identify a particular end user. Here, let's assume that B2 happens to be a student who's pursuing 10th standard. B2, when he comes to the shop, to this company called a seller called XYZ Systems, B2 says, sir, I'm a student who's pursuing 10th standard. Please see, this is my a school's certificate. Please sell the laptop to me. Then the seller says, look, there is a company called HCL. They are giving a subsidy of 15,000 for laptops purchased by the students. So here, this amount 15,000 is called subsidy. So here, my section 15 subsection 2 clause E says, any subsidy other than received from central government or state government should form part of value of supply. So here, when seller has to prepare a bill for B2, if you look at this bill, this is how the bill looks like. So this is my particulars and this is my amount. Particular says value of laptop, 25,000. Then subsidy from HCL, 15,000. Value of supply under section 15, 40,000. GST at the rate of 18%, 7,200. Total 47,200. This is my total invoice value. What happens here? The student, whoever is there, the student out of 47,200 minus 15,000, which is given by HCL, 200, say to 32,200. 32,200 cash or NEFT. This 32,200 will be paid by student. 15,000 will be paid by HCL directly to this seller called XYZ Limited. Now, this is one example which I have given to you. Homework for you. Visualize how the accounting entries are posted. Visualize how the settlement will happen from HCL to this XYZ Limited. Visualize how the sundry data, how the subsidy is recognized in my books of accounts. This is how you learn the accounting aspects, the applicability of IGAP provisions, disclosure of revenue in my books, disclosure of revenue for the purpose of GST. This is my last clause under 15 subsection 2. Are there any students as of now to understand? Yes, Aniket, it's an infinite loop. Matsa, did you get the clarity on TCS? Ma? Is that clear? Are we clear, students? Can we go further? 15 subsection 2. Please confirm. Ma? Once I get a thumbs up from some of you, I'll go ahead with my subsection 3. In subsection 3. Let me have a thumbs up from some of you. Okay. Man says, Asi, so please explain again, why did you deduct subsidy? Okay. Man says, I have not deducted any subsidy, ma. I have put my calculation like this. What I have said is, my value of laptop is 25,000. 15,000 is added. 15,000 is added. Let me just erase. Under 15 subsection 2 clause E, because it's a subsidy received from HCL, which is other than state government or central government, I add 15,000 to 25,000. I get my value of supply 40,000. On this GST at the rate of 18%, 7,200. My total invoice value happens to be 47,200. When I raise this bill, out of 47,200, I am saying that 15,000 HCL is going to pay. Balance 32,200 is what student has to pay to the seller called XYZ Systems. This is what I have explained. Hope this is clear, Mansa. Great. Now I'll come back to my 15 subsection 3. 15 subsection 3. I gave this example. This also I have touched upon. This is just a recap of our subsection 2 students. Point number 1, clause A, taxes and duties. Clause number 2, freebies. Clause number 3, incidental expenses. Clause number 4, your penal interest, etc. Clause number 5, subsidy. These are the punch sheet which I have considered under 15 subsection 2. Moving on. Pure agent. I'll just explain this concept of pure agent. Very simple. Pure agent, it means to say a person who enters into a contract or arrangement. When I explain this pure agent, please remember this example of a chartered accountant who paid ROC fee on behalf of the client. The expression pure agent means the person who enters into a contractual agreement with the recipient, that is with the company, of supply to act as his pure agent to incur expenditure or cost. So I incur money in the course of supply of goods or services. Neither intends to hold nor holds any title. I am saying that I don't provide this service nor this is for my personal purpose. Does not use for his own interest. As a CA, I have nothing to do with the 300 rupees. Receives only actual amount. As a chartered accountant, I paid 300, I got 300. Now, when you talk about this clause C, does not use for his own interest. Like when I talk about this, remember this scenario 1, scenario 2, when I talked about incidental expenses, hotel accommodation, food. When I talk about food, I eat vegetarian, I eat non-vegetarian. This is my personal consumption. I stay in a AC accommodation, I go in a non-AC accommodation. It is my personal interest. So in case of ROC fee, I am calling myself as a pure agent. The expenditure or cost incurred by a supplier as a pure agent of recipient shall be excluded. As a chartered accountant, when I charge that ROC fee, I exclude that, provided the following conditions are satisfied. If all the conditions are satisfied, what is that? Supplier acts as a pure agent. Chartered accountant acts as a pure agent. Now, in case of a bank, I wanted to give this clarity here. When I talk about a pure agent, bank and chartered accountant. Can you see the engagement letter, the appointment letter? Nowhere banks have appointed the chartered accountant either for stock audit, for statutory audit, saying that I appoint you as a pure agent for conducting this particular audit engagement service. None of the scenario banks have authority nor banks to engage or appoint chartered accountant as a pure agent. This is a thin point which is good enough to say any money I have to recover, any money I recover from bank, sir, I'm not a pure agent. Sorry, excuse me. I have to recover GST on that. There's one Gujarat High Court judgment in case of a bank where I'll just clarify this example this way. Gujarat, where say there is a public sector bank and there is a service provider called XYZ Security. XYZ Security. Now, public sector bank has got bank branches and also they have ATM, anytime money machines. Now, XYZ Security, they have undertaken the activity of drawing money from currency chest, and this money will be circulated from currency chest to branch, also will be loaded in ATM. In the process of this, XYZ Security have to pass through national highway, where they pay something called toll charges. Now, like service provider, when he raises a bill, he says monthly fees, say 1 lakh, GST at the rate of 12%, say 12,000. Then toll charges, say 1,000. All added together 1,13,000. Now, this toll charges were claimed for exemption, saying that, sir, I'm a pure agent. As a pure agent, who this XYZ Security, he says, sir, I'm incurring 1,000 rupees. I'm a pure agent of this Punjab public sector bank. I will not charge GST by virtue of Rule 33. Now here, the department has examined. Look, this is an incidental expense. The toll charges are nothing but incidental expenses. For a moment, I go with an argument saying that toll charges are exempted under GST. You wanted to claim exemption because this is paid as a road permit. By virtue of your government service, this is exempted. However, I'll call this as incidental charges. Before calling that as incidental, the whole argument went on under Rule 33, where they say, where is a contract where the public sector bank have appointed this particular XYZ Security as pure agent. If you can prove that you have been appointed as pure agent, then I'll give you exemption. This was one treadmill argument which went in, and the Gujarat High Court also said, yes, there's a weight in the argument saying that unless you demonstrate that you are appointed as an agent, I cannot consider this under Rule 33, whereby this was considered for the purpose of GST. This was a point relevant for my incidental expenses. Then subsection 3. Sorry. Payment made by the pure agent on behalf of the recipient of supply has been separately indicated. So wherever I, as a chartered accountant, I bill 300 rupees, I mention in my bill reimbursement of expenses as pure agent, ROC filing charges. Supplies procured by the pure agent from third party as a pure agent of the recipient of supply are in addition to the services. Sir, I'm rendering chartered accountant services. What I have charged is additional thing. This example we have discussed. Then, subsection 3, value of supply not to include discount. Not to include discount. I'll just add a couple of slides to give examples for you to understand. Just give a minute. First, I'll give you the backdrop of this discount. Then I'll get you to the practical difficulty and how the GST law is working in this aspect called discount. Starting point. Discount which is mentioned and printed on a tax invoice is called trade discount. I repeat, the discount which is mentioned and printed, on a tax invoice is called trade discount. Let us assume that once Viraj goes to a let's say hardware shop or electronic gadgets shop. Viraj wanted to purchase a television where the shop fellow says, sir, the listed price is rupees 50,000. Listed price is rupees 50,000. If you buy today, I'll give you a discount of 10%. Sir, if you come tomorrow, there's no guarantee. So when Viraj is impressed with the offer, he checks on Amazon, like no usual tendency. I go to LinkedIn, but not LinkedIn. What is it? Amazon, Flipkart, or various other Meesho, etc. I found here all the places it shows 45,000. This fellow is giving a discount of 48,000. This fellow is giving 45,000. So here, when you prepare an invoice, the invoice looks like this, where you say value of television 50,000, discount at the rate of 10%, 5,000, net value of supply 45,000, GST at the rate of 18%. This is what I mention and I collect from my customer. Now, this is called trade discount. Other than trade discount, which is not, this is my printed tax invoice. A discount which is other than trade discount is called other discount. This other discount, I have various nomenclature. I can call this as a financial credit note. I can call this as a annual discount. I can call this as a cash discount. I can call this as a additional discount. I can call this as a seasonal discount. See, all these are the nomenclature which we have called in business. I want to get money. I wanted to make my customer repay. I wanted to make my customer to repay early. For that purpose, I give these discounts. This could be one reason. Second reason, for getting more sale. Like say when we are studying these provisions, I said we learn business. Let us assume that there is a wholesaler, there is a retailer. Retailer sells to end customer or B2C. Wholesaler sells a product at the rate of 10,000. Retailer adds 20% margin, sells to end customer. A particular month, the wholesaler says, say if you buy 5,000 units, 5,000 pieces, I'll give you an extra discount of 10%. I'll give you an extra discount of 10%. Now, here, what is happening? Month 1, month 2, month 3, you're giving a target to the customer, who is giving, wholesaler is giving a target to retailer. You're giving a discount, and based on the volume which is met, you're giving something called discount. Now, this is how my business is functioning with various discounts. What does GST law has got something to do with this? GST law says that, look, there is a discount. Could be a volume discount, could be a cash discount or price discount. This discount should be by virtue of a contract. And this should be known to both seller and buyer. And if this is based on terms and conditions stipulated thereupon. If these all conditions are satisfied, this particular section 15 says, whatever discount is given, don't charge GST. On such discount. Provided GST charged has been not passed on to customer. This last line I'll explain again. As of now, let us understand till here. It says that, look, assuming that there is a month 1, month 2, month 3, and month 4. There are volumes which are purchased by the dealer. There is an eligibility at month 3 for some discount of say rupees 20,000. In month 4, when the bill is raised, say normal value of supply. For month 4, my value of supply is 1 lakh. I give a discount of 20,000. Balance is 80,000. This is my net value of supply for GST, on which the seller will collect GST from my customer. This is the terms and conditions stipulated under section 15, subsection 3. Section 15, subsection 3. I repeat once again. 15 subsection 3 says, the value of supply shall not include any discount. When I say not include discount, when I charge to my customer, if there is any discount, exclude this particular discount. What and when, which is given, when it is given. Sir, it is given before or at the time of supply. This means to say knowledge. There is a contract. There is a transparency. Seller says to the buyer, look, I'll give you a discount which is communicated before the sale or at the time of sale, and which is duly recorded in the invoice issued in respect of such supply. If such discount has been duly recorded in the invoice issued in respect of such supply. So if the discount is recorded, then I'm like assuming like trade discount. If I issue a trade discount, I'm eligible for deduction. This is allowed. Clause number B. Sir, after trade discount, that is, After the supply has been made, if I give a discount, what do they say? Such discount is established in terms of agreement, entered into at or before the time of supply and specifically linked to the relevant invoice. I correlate and say month 1, month 2, month 3, which are quantified and enjoyed at month 4. So when I give a discount in month number 4, I have to correlate this to these particular month's tax invoices. I have to say, at that point in time, I promised you that I'll give you this volume discount. Because you are satisfied, I'm exchanging this discount. Last but not least, what do they say? Input tax credit as is attributable to the discount on the basis of document issued by the supplier has been reversed by the recipient of supply. I'll explain this by way of an example. Say there is a quantity discount. What do I say? I give a target. Let me say target discount. Target discount. In the sense, you get 10% of volume achieved. So I'll put this way: month 1, month 2, month 3, month 4. Regular. This is regular sale. This is additional sale. I've given target to my customer. What is that? Regularly, you are buying 10,000 units every month. Month 1, 10,000 units. Month 2, 10,000 units. Month 3, 10,000 units. Additionally, volume says if you buy 10,000 units, you get a discount of rupees 1 lakh. You get a discount of rupees 1 lakh. This is what seller promises to customer. Month 1, in addition to regular purchase, the dealer purchased 2,000 units. Month 2, he purchased 5,000 units. Month 3, he purchased 3,000 units. Now, this is a triggering point. As on month 3, the value of additional units is 10,000 units. Month 4, assuming there is no regular purchase. Now, when it comes to the promise of the seller, since he has purchased 10,000, the customer has purchased 10,000 numbers, in month 4, a credit note will be issued for 1 lakh. On 1 lakh, assuming GST on these products, GST is taxable at the rate of, say, 12%. What will the supplier do? He'll give a credit note of 1 lakh on this 12% GST. 12,000. Total 1,12,000 is given to the customer. So here, my section 15, subsection 3 says, when this GST credit note is given, ensure that buyer reverse the input tax credit. That means to say, seller gives credit note. Buyer reciprocates by way of a debit note. Now, this is the accounting aspect. Chartered accountants, you're all going to be the future chartered accountants. This is one area where we do blunders once we get into the practice, once we get into the industry. When seller is giving a credit note, the buyer has to reciprocate by way of a debit. the buyer has to reciprocate by way of a debit note, right? So here, seller should ensure that this input tax credit of 12,000, which like no, this is a reduction of output tax for seller. This is a reduction of input tax for buyer. This is what my section 15 subsection 3 talks about discount. Any doubts before I go further? Any doubts on this before I go further? Let me know. Are you having any doubts? Viraj, I don't understand your question, man. Where we have used this argument, I am not clear. If you can elaborate, I'll explain this, Viraj. Others, are you clear with section 15, subsection 3? Please confirm. Very, 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 very important point. This is connected with section 34. Two sessions down the line, I'll touch upon tax invoice, debit note, credit note. I'll elaborate section 34. I was expecting someone to ask this question. Rightly, Aniket is asking this question. Credit note issued by seller to reduce the balance of debtors. Absolutely correct. 100% you are right, Aniket. This is what I was expecting the future chartered accountants to understand the concept. For benefit of other students, I'll elaborate this point which Aniket has brought in. I really appreciate your thought process, Aniket. From the seller's point of view, when we look at this particular explanation, seller's point of view, this is my sundry data. Month four, when there is an obligation, what is my obligation? Volume discount or target discount? By virtue of target discount, because my customer has met his quota, I reduce the sundry data. Sir, how do I reduce sundry data? Sundry data has a debit balance. Issuance of a credit note, the sundry data's balance gets reduced. Credit the sundry data to reduce the receivable by virtue of a credit note. Alternatively, vice versa. Think from the buyer's point of view. Buyer's books, sundry creditor will have a credit balance. Once I have met my target, I have to receive 1 lakh from my seller. I debit my sundry creditor to reduce my payable. So credit note in the books of seller reciprocated by way of a debit note in the books of customer. Thanks for the confirmation, Rahim. I'll spend another 3 minutes. Bear with me. 15 subsection 4, where the value of supply of goods or services cannot be determined. Under subsection 1, same shall be determined in the manner as may be prescribed. What it says, sir, price is not the sole consideration. It is a related party transaction. Then I will travel to valuation rules. To find out what should be the appropriate value. Similarly, 15 subsection 5, as I said, government retains its power, ancillary power, to define what should be the value. So if I fail from 15 subsection 1 to 15 subsection 4, notwithstanding anything contained in 15.1 or 15.4, value of supplies as may be notified by the government. Recommendations of the GST Council. Now, Mansa has asked one question. Mansa, I'm justifying your question at this point in time. Now, Mansa has asked, so please throw some light on GST Council decision, GST Council recommendation on corporate guarantee. Now, it so happens that, I'll give an example. Say XYZ Limited This is a holding company. ABC Limited, PQR Limited. This is a subsidiary. This is also subsidiary of XYZ Limited. Now, ABC Limited, or say, let us take example, PQR Limited approaches State Bank of India for availing 50 crores loan. 50 crores loan. Balance sheet of PQR Limited does not have sufficient security for extending 50 crores loan. Now, this 50 crores loan, XYZ Limited approaches State Bank of India and says, look, please lend 50 crores to PQR Limited. You want security, right? I'll give a guarantee for this. I'll give a guarantee for this thing. Now, based on this guarantee, the loan is extended by State Bank of India to PQR Limited. Now, this comes this particular guarantee. There comes this particular guarantee. First and foremost, XYZ Limited vis-a-vis PQR Limited. Vis-a-vis PQR Limited. Now, is this a related party transaction? If XYZ Limited holds 100% of equity, then I would call this as a related party transaction. When it is a related party transaction, 15 subsection 1 fails. I cannot apply 15 subsection 1. Then what will I do? I'll travel to valuation rules. So here my XYZ Limited, because they are related to PQR Limited, there is no consideration charged. There is no consideration charged for this particular value of supply. Why? XYZ Limited, if it charges to PQR Limited, this becomes a burden. This becomes a burden to PQR Limited. Whatever money is owned, whatever money is earned by XYZ Limited, by PQR Limited, this is directly or indirectly comes back to XYZ Limited. So not to burden PQR Limited, XYZ Limited does not charge any consideration for this guarantee. Generally, this guarantee has got some consideration, or I would say charge. Generally, 2% is the market practice. In the sense, any company which gives a guarantee to a subsidiary company, they'll say, look, you're enjoying 50 crores as bank guarantee. If it is 1%, 50 lakhs would be my commission. Or if it is 2%, 1 crore would be my commission. So yet so happens that because my personal assets or my assets are pledged as security to the banker, I would charge you 1% or 2% as a commission, which is called corporate guarantee fee. In case if there is a related party transaction where I don't want to charge this guarantee fee, there this 52nd GST council meeting, 52nd GST council meeting has examined and made a recommendation. What is that? They say 1% of guaranteed value is presumed to be the value of supply, or actual money charged, whichever is higher. This would be considered as value of supply under Rule 28, Sub Rule 2. This is a recommendation which was made by the GST Council. Mansa, I made your day. Whatever questions you have asked, I've clarified now. And you gave an opportunity for me to touch upon the example where the recommendations of GST Council is enjoyed under 15 subsection 5. Students, we are at 9:05. Let us stop our discussion for today. The next class, what we are going to discuss, there are 13 valuation rules. I'll make you to understand why these valuation rules and how it will help us to understand these provisions better. With this, I come to the end of today's discussion. Good night. Goodbye.